RBC says the Bank of Canada may decide to hold rates unchanged this week. Let's get more from Francis Donald, chief economist at RBC. So it's nuanced. You think there's it's narrowly more likely they hold rates?
Well, we're just saying it's not a slam dunk. There's certainly a lot of things that are not going well in Canada. We had a very slow second quarter. That was mostly trade and some business sentiment coming through. And there are pockets of the economy that are losing jobs, particularly trade related. And yet on the other side of the picture, inflation is actually not looking very solved at all. In fact, core measures of inflation have been reaccelerating, and the breadth, the number of categories that are rising above 3%, also getting larger. Couple that with the fact that we're still not convinced that rate cuts are actually going to solve what ails Canada right now. And maybe it's not such a sure thing when you have those other factors to consider as well.
That's interesting. So it's hard, obviously, to separate out the effects of tariffs on inflation. But even if you do have a stab at that, there is still upward pressure on prices in our economy?
Well, that's the issue. And the concern for a central bank in this type of environment is not so much what's the direct impact of tariffs, because you can sort of parcel those out to a certain extent. It's what is the bleed through. Now, Canada is not facing reciprocal tariffs, so we're not concerned about inflation coming through on things that we're buying from the United States. We're focusing more on some of the other categories, the breadth across which we're seeing those prices rise. And the Bank of Canada is going to want to be really careful that it doesn't ease in one area and amplify inflation in another. You might remember, Andrew, we've all just gone through one of the biggest price shocks of our entire lives. Prices in things like food and rent are up over 25% compared to where they were before COVID. It's hard to look at this environment, see inflation core measures heating up a little bit and saying, oh, absolutely, we should cut in this environment, particularly because, as I mentioned, we could cut rates all we want. It's not going to solve a trade war with America.
Yeah, so, I mean, we've heard this in the past. Monetary policy is only good for some things, and it's not great for a trade war.
Well, in particular, because this trade war is creating such a fragmentation across Canada. I mean, you go down to Windsor, Ontario, that unemployment rate is 11%. It's a crisis there. And then take a look at places like Quebec City or Victoria, and the unemployment rate is actually quite low. There's no major shock in play in those areas. So the Bank of Canada, unfortunately, eases for everybody. I wish there was sort of a central bank for southwestern Ontario that could ease 100, 150 basis points for that region and tighten in other areas of the economy. So this is a complicated area for the Bank of Canada to traverse. And let's say the Bank of Canada does cut on Wednesday. I would just be cautious about saying that's necessarily going to save Canada, and particularly those pockets that are really hurting. We need federal government intervention, provincial government intervention to really support those sectors that need help right now. But falling back on the idea that central banks are always the saviors of the economy, I think it's just worth questioning that a little bit right now.
I'm old and cynical, Francis, and I think companies increase prices whenever they can. I mean, they say, oh, our costs are up. They increase prices. Well, why not? I mean, it's capitalism. And I guess you have cover to increase your prices in the current environment. People are used to inflation now.
Well, I'm slightly less old, but still cynical. And yes, that is true. You would see some companies possibly taking advantage, but let's remember that depends who you're selling your products to. There's a fragmentation not just by geography in Canada, but also by income levels. Low and middle income Canadians have suffered through inflation much more than high income Canadians. They're much more leveraged to food and shelter, where prices have gone up substantially more. They haven't seen the same household income increases. They're not benefiting from that stock market acceleration to the same extent. So who you are as a business determines whether you can increase prices or not. And if you're selling to low and middle income Canadians right now, you may say, oh, now's an opportunity. Maybe we could slide one under, but you'd probably see customers push back on that.
So bottom line, you say that there's a narrow balance of possibility the Bank of Canada stands pat on Wednesday.
I don't think it's as clear-cut a conversation that everyone's going to walk in the room and say, absolutely, now is the time for us to cut rates and save Canada. And it's worth considering whether we're using the right tools to address the problems that are facing us. And we say the Bank of Canada has time to assess a little bit more, pay attention to some of that inflation data, look at the evolution of trade, and then make a decision at a later point.
This is a bit of a tangent. That's one of my superpowers. But you mentioned housing inflation. The government saying we're setting up this Build Canada agency. talking about 4,000 homes, but last I saw, CMHC says we need 3.5 million extra homes this decade on top of what we're going to build.
That's right.
So do we need to really get serious about building more housing?
Oh, absolutely. But, Andrew, housing's a mess in Canada. It is a range of reasons that we can't get enough supply going, from the type of homes that have been built historically to regional concentration, those jobs being created in places like Toronto and not across the country. Our expectations for what we should be able to purchase, single-family homes, for example, range of issues in play. We can tackle them. Let's celebrate 4,000, but yeah, we're hundreds of thousands away from where we need to be on a go forward. I'll say this one point, though, speaking of housing, we have seen some improvement in the housing data a little bit in the last couple of months. That's something also that we can say is going a little bit better for Canada than where we were just a few months ago.
It's been the Weimar Republic, the ill-fated Weimar Republic, apparently built a lot of housing. Germany had a housing crisis. And apparently a lot of the housing estates were beautiful. They were modern. They were kind of Bauhaus-looking housing estates. I hope we get a bit of beautiful housing in Toronto and in the country.
I hope we get housing in places like Calgary and Montreal, and that we move the housing conversation away from just the GTA and the crisis that exists here.
Condos.
Let's talk about housing and its different cycles and what different issues are facing different regions in housing.
Yeah.
And yes, maybe we could get beautiful German homes across the entire country, not just in Toronto.
Even with a bit of aesthetic sense. I'm not asking that much. Yeah, anyway, it's interesting, though. I do know that in parts outside cities in Ontario, you just can't get workers because they can't afford housing. So it's a multi-layered problem.
There's no question. Housing is at the center, in my view, of how we attract and retain labor as well. So it's not just about affordability. It's not just about the economic benefits that come from construction. It's not just about the important sector of real estate developers as well. There's so many facets with which we can look at housing that any sort of new policy helps, but there's no one policy that's going to be a panacea for what is truly, we talk about a trade crisis in Canada, housing crisis still very, very present for a lot of Canadians, and may end up having more longevity and more sort of tentacles through which this economy than some of these discussions around even CUSMA or reciprocal tariffs.
Just longer term, we've had something of a crisis of low business investment in this country. Is there any prospect of that improving?
So former governor of the Bank of Canada, Stephen Poloz, used to call it a serial disappointment. What a word for that, right? Business investment.
My wife has said that about me
serial
a couple of times. Carry on, sorry.
Exactly. So what do we need to see? We need a sentiment shift in Canada, and a lot of that, I think, is going to come down to deregulation. That'll be really, really important to attract flows into Canada. And also, let's take a look at that tax code, see how we can be competitive or not. But what I find interesting about business investment is I suspect that if the government wants to get that going, it's less about dollars spent and more about other policies that can be removed. We heard from Prime Minister Carney, for example, is trying to support the manufacturing business, also said, let's remove that EV mandate. Not saying that's the right or wrong thing, but those sort of two tracks in parallel is going to be really important if we want to rev up business investment. We're also going to need clarity on trade. Hate to say it, not a lot of global investors getting really excited about high-risk bets right now in any countries around the world. So we've got to mollify that and then get through to the other side, and a little focus on what can we do to make Canadians feel great about building companies, scaling companies, exporting companies. That's going to be clutch for Canada.
And we're tight for time. The Fed, it's a given they cut, do you think, Wednesday?
Well, nothing's a given. We love a little market surprise. Good for shows like yours. But yes, the Fed does want to cut on Wednesday. They've got plenty of weak data to support it. But the Fed also cutting into accelerating inflation. Their inflation is going to be much more problematic than Canada's by the end of 2025.
Why is that?
Well, they have tariffs. We don't have tariffs being applied on everyone else. The United States is the center of the 100-year shock. They are going to see some pretty big increases in the goods that they import.
So it's fair to say they're the most protectionist they've been in a century?
Oh, that's just the data. That's not an opinion or extrapolation. Yeah. It is the largest trade shock in 100 years facing the American economy. And the United States is going to, or the Federal Reserve is going to try to do what it can. But of course, that Fed, a dual mandate. Unlike Canada, they have inflation and jobs. In their case, they're clearly weighting those jobs deteriorations more than the inflation upside. Bank of Canada, only the inflation side, a little bit of a simpler job here in Canada.
Frances, thank you so much.
Thanks for having me.
Frances Donald, the one and only chief economist at RBC.